All right, so in this video, I wanted to do a portfolio update of Questrade. I've got 4 accounts with Questrade. I've got a margin account that I use mostly or only for option selling, where I sell naked puts and I do put spreads. And then I've got a TFSA, which I try to do in the money covered calls, or ideally buy and hold dividend stocks or any quality name that dropped hard. And then RSP and RESP, I try to do in the money covered calls. So I'm going to go through my portfolio and show you my current positions. But first, you can see that the equity has finally gone up above 120. So right now, as of today, as of June 11th, I'm sitting at 123, 121. So now I'm going to go look at the accounts individually. So in my margin account, it's all option selling strategies. So I've got naked puts and put spreads. I actually closed a few positions today. Let's look at what I closed today. Orders executed. So Pinterest, this was a naked put that I had for earnings and it got breached and I had to roll it to save it. And I finally closed it today for $2.50. My total credit received on that naked put was about $3.15. So net profit was about $50. And then I had a put spread on Teladoc that I closed today for 40 cents, so $60 gross profit. And then I had the same thing as spins here, but on Twitter, a naked put that I had done for earnings that got completely breached. I had to roll it several times, and I was finally able to close it today for $1.20, giving me about $1 gross profit. So that's today. So if I go back to my positions, I've got a naked put on AI here. Wasn't the best entry. I sold it. I sold the 55 put for July 16. Collected $2.50 for that put, and at some point it was worth over $4. Right today it closed at $3.08. But AI, I think, is trading. Right now it's above 60, but I think I see barely above 60. It's at 60, and even after hours it's at 59. But at some point it was trading close to $56 last week, so definitely not the best entry. But that's the advantage of a naked put, is it could go up and down a little bit. What matters is by July 16, if it's above 55, I win. And as time goes by, maybe this $2.50 will be worth maybe $1.50, and I can close the trade by then. So gives me more room to win, more scenarios where I can profit. As opposed to just buying and selling or swing trading, I would have to time the low and time the high. I would have to buy it at the right price, wait for the stock to go up for me to make a profit. But in this case, the stock can stay flat for a bit and I could still make a profit. All right, next here is a naked put on Curiosity Stream at a 17.5. So this is a bad trade that I had to roll all the way to November, but it's doing better. It's coming back up, as you could see. I think my net credit on this was about, actually let me open my trade log here. So I think my net credit on Curie is $3.32. So you can see I can't even close it right now, because if I close it right now for $4.80, I would lose about $1 something. So it's close to being break even, but not yet, not closable yet. Then I've got an Etsy put spread. This was a trade that I had to roll because it was from earnings. It got completely breached, so I rolled it all the way to December. It was a 5-point wide put spread that I rolled all the way to December by increasing the width of the spread to a 10-point wide spread. I've got another put spread on Etsy, same thing for earnings. I had to roll it to June, and now it looks like I'm gonna have to roll it again. But it looks okay. It looks like it has a chance for this week. Small chance, but I mean it has a chance. Etsy's at 170. It was at 165 last week. June 2nd was at 175. So I'm hoping that by this Friday, because expiry is this Friday, I'm hoping that Etsy is above 180, because my short strike is 180. My put spread is 180, 175. If it's not, I'm gonna have to roll it. And there are two possibilities. I'm either gonna roll it by increasing the contract size. So here's an example. Here's how I could potentially roll this put spread. I'll add another put spread. So let's say I go all the way to, let's say I go to September. I add another put here. So I'm trying to create a put spread for September. So I would sell, let's try the 170 and 165. Actually, let me show you. What if I do the exact same strikes? What if I do 180, 175? So you can see if I do the exact same strikes, but I go to September, it's going to be for a debit. DR, I'm gonna have to roll for a debit, so that's not what I want. So what if I increase the contracts? So same strikes, but I just increase the contract. If I increase the contract, that means I'm adding risk to the trade, but I'll be able to do it for a credit, combined credit, a net credit of about $2. Okay, so that's potentially a trade I could do to save this one, but I could do it for $2, or if I want to make it safer, I could bring it down. I could bring the strikes lower. I'll collect less, but I make the trade safer. So I go from 180, 175 put spread to 170, 165, but I've increased the contracts. And I could still do it for a credit, a net credit of about maybe 80 cents. Maybe I can even bring it even lower and try to make it even safer, 165, 160 for September. And I could do it for a net credit, a much smaller credit. And it looks like I can go even lower. I can go to 160, 155. So if I do that, and see, now I cannot do it for a credit anymore. It would have to be for a debit. So the lowest point I can go probably is 165, 160 for September. So that's one way to roll this put spread. Another way is actually just to turn it into a naked put. So close my put spread, but then sell a new put. I could probably go to July and sell, let's see, if I sell the 160 put for July, I could do it for a credit. So it's either I'll do it as a put spread, adding an extra contract, or I could do it as a naked put like this here and go to July. And as long as it stays above 160, then I save the trade. The problem with this though is that it's going to take a lot of buying power out of me. Etsy is a 50% margin requirement stock. And if I do the 160 strike, while Etsy's trading at around 170 right now, it's taking 7,500 of capital requirement of maintenance excess. So that's my position with Etsy. I've got HIMS here, which is a naked put as well, which got completely breached because HIMS is trading at around 12.5. My short put was 17.5. So I need HIMS to be above 17.5 by November 19 for me to win on this trade. I've collected a total, here let's look at HIMS here, 17.5. I've collected a total of $2.62. And right now it's trading for $4. So it's not ready to be closed yet. If I close it right now, I would confirm a loss of $200. I've got a put spread on Snow. So this was once again a put spread that I had to roll because it got completely breached after earnings. So I rolled it all the way to December. Right now it's out of the money, but because it still has a lot of time left, it has 186 days left, it's not really closable right now. I've collected a total credit of, I think, $1 something. $1.30. So it's not closable yet right now. It's, as you can see, it's closable for $4.30 about right now. So can't do anything right now. Spotify, this was a naked put as well that was completely breached after earnings. I rolled it all the way to 250 strike for July 16. It's doing much better. It's coming back up, as you can see. The total credit that I received on Spotify was $4.20. As you can see right now, it's trading for $10.43. So it's not closable yet, but it's getting there. And what's more important though is that the stock is trading at 251. So officially my put is out of the money. But because I've got 32 days to go, the put option is still worth $10. I need it to be worth less than $4 so I can close the trade for a profit. But at least it's in the right direction. At some point Spotify was trading at 215, 215. So that was terrible. But right now it's on the right track. Hopefully it remains. Got another bad trade here, naked put on Sumo, 30 strike. I've got 2 contracts on top of that. Let's see how much I collected on Sumo. Total credits on Sumo is $3.56. Right now it's worth $10. So very far from being closed. And my short strike is 30, and Sumo's trading at 20.56. So I'm 10 points in the money. So that's not a good trade at all. All right, next in my TFSA, I don't have many positions. I'm just waiting to buy something, waiting for opportunities. I really regret missing out on the crash of March 2020. I wish I bought more stuff, but of course, no one knew where the bottom was. Anyway, so all I could do right now is I bought some BABA at 223. Even at 223, it wasn't the low. BABA keeps falling, but I'm prepared to buy some more BABA shares if it drops below 205, for example, or even 206, 207. I'll buy some more BABA shares. I've got some AMD at 76. It's profitable, showing a 7% profit. Got some gold shares. I mean, it was trading at 178 before. Right now, today it dropped. was showing almost a $100 profit. Right now it's showing a 2% profit. Got another HIMS covered call here. So it's got a 12.5 strike and it expires this week, June 18. So what that means, as you can see right now, HIMS is trading at 12.9. So what that means is if it's trading above 12.5, I can close the entire trade for 12.5 if it's trading above 12.5 because my short strike is 12.5. I have collected my net entry on this covered call is 11.8. So I would make a profit of the difference, 12.5 minus 11.8, so about $70 profit, gross profit. Or what I could do is I can roll it for more credit. So here's an example of rolling it for more credit. I would buy back my call here and then sell another one, let's say July, same strike, and I could collect somewhere in between 35 cents and 70 cents. So let's say 45 cents or 50 cents. So I can roll it and collect an extra $50 as long as it stays above 12.5 by July 16. Then my total profit on this would be 50 plus 70, so $120. So that's another possibility with this trade. So it's not a bad trade. And I bought some Kimberly-Clark here when it dropped hard. I mean, it's a dividend paying stock. It's similar to Procter & Gamble. I mean, it's not going anywhere. So I just bought it when because it dropped a lot. And that's it, 10 shares at $130. It dropped today to 128. Actually, right now it's at 129.52, so not bad. I actually had some other trades in my TFSA that I sold recently. I had Splunk that I bought at 113. I sold at 119. Let's see what it's trading at right now, 122. So I definitely sold too early, nothing new for me. And I think I had Unity as well that I sold too early. I sold at 90, it's at 102. Yeah, I'm pretty good at selling too early. Anyway, so going to my RSP now. I've got in the money covered calls. They're pretty much, most of them are doing badly. So this one's pretty bad. This one's pretty bad as well. This one's pretty bad. This one's okay. Rocket covered call at a 23 strike. Stock is at 20. I bought it at 22.8, but I collected a lot of premiums. My net entry on Rocket is 19.3. So as you can see, that's my net cost. If Rocket is at 23, if I lose my shares at 23, then I make my profit is the difference. I'll just keep collecting call premiums. I'll keep rolling the covered call on this trade here. So I'm okay with this one. I don't care. This is a SPAC doing pretty bad. This is a covered call trade, which is okay. It's not bad. My net entry on Luminar is LAZR is 23.67. And yeah, I'll just keep rolling the covered call and collecting more premium. So I'm not worried about that one. And yeah, this one's doing pretty bad as well, but whatever. So yeah, but I still have buying power. I mean, I've got about 40K Canadian buying power in my RSP. So I'm just waiting for opportunities. Anything that crashes or a strong red day and I'm ready to buy something or even sell an in the money covered call, which replicates an out of the money put. And I have a video explaining that. If you just look at my, if you browse my videos on my channel, it's a recent video. I've got a video explaining how I use in the money covered calls to replicate selling out of the money puts. And then finally in my RESP, I've got 4 covered calls. I've got a Bitcoin covered call, which is doing okay. It's showing a $100 profit. If by July 16, this ETF is above $8, I will make a profit of $8 minus $665. Actually, let me just show you on my spreadsheet here. If it's above $8, I'll make a profit of the difference here. So 8 minus 565, so about $2.45, so $245. Or I could keep rolling the covered call and sell more call options and receive more premium. So that's another possibility. I've got a covered call here on SFT Shift. Not doing so great. I mean, it dropped hard. I bought more shares when it dropped hard, because I only had I think I bought in at $10, so it wasn't much, it wasn't a big amount invested. So I bought in more shares when it dropped to $7.50, or I think it dropped even more. And right now it came back up, and I had sold a covered call to November 7.5. So my max selling price on this is 7.5. But if I do end up closing the whole trade for 7.5, I would make the difference here. So it's not an amazing trade. It's not the best capital efficient trade, but yeah, I got stuck on the trade because it dropped hard. And then I bought some more, and then I sold the covered call too early at 7.5. If I just waited, as you can see, the covered call that I sold for $1 is now worth $2.30. So yeah, I'm missing out on that. So I sold too early. And then I've got 2 Wish covered calls that are doing terrible, but hopefully it could get short squeezed and come back up above 20. I've got an average price of 16.78, but I've got two different expiries because they were entered two different times. Yeah, so that's it. So yeah, just want to share what I'm holding in my portfolio. I want to make a video on a potential SPY put strategy that I want to implement in my margin account. So that should be coming up soon. So if you have any questions, any suggestions on what to buy as well, leave in the comment section below. Also check out the other referral links below. We've got a Questrade referral link that will give you $50 in free commissions and many more stuff. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.